Hi guys and welcome back to Crypto News today with Yashi. Sorry for not posting yesterday, but I had a little project with one of my flips. I thought I would do it in one day, which was Monday, and then I ended up doing it in 2 days, so I couldn't post yesterday's update. So let's get started here. I'm recording. Bitcoin today, 16,813. We are under 17K for the first time in the past 2 weeks. Ethereum also down 3.5% at 1226. BNB down 283. Probably the one that dropped the least compared to the others. Let's start here with Sam Bankman, FTX, former Alameda CEO, not Sam Bankman, this is another guy, spent $10 million plus on luxury properties. The article also mentioned he bought a yacht and then left Alameda around August. Did he know what was happening, or did he leave for other reasons and was unaware of the whole FTX and Alameda situation? We don't know about that. Crypto security. iPhone and iPod co-creator designs new hardware wallet for Ledger. The guy who created the iPod brought us the iPod, came together with Ledger to create a new sophisticated Ledger hardware wallet to bring more security. In this case, he's talked more about focus on security and usability, make it easy to use for the average general user rather than make it nice and beautiful, which is good. I should buy one just to test it out and let you know how it is. We'll see if I will. I'll let you know about that. Developer popular MetaMask wallet that reduces customer data retention to 7 days after backlash from community. Last week I mentioned on an article about MetaMask. The MetaMask subsidiary company would collect all the data such as IP address and much more when users would download a MetaMask wallet. People got really angry about it because the whole purpose of crypto is privacy and no data breaches, no use of data. So they said that they still have to do it, but they're gonna reduce the retention of that data by 7 days. Does that solve the issue? Does it make it little better? I don't really have an opinion about this. Because at the end of the day, I believe that all companies have our data. So if another one has my data too, do I really care? Yes and no, but opinion is on you, not on me. I'm just here to report some data, and I will mention when I put out my opinion. CEO of crypto-focused bank Silvergate addresses insolvency concerns. Here's what he said. So there was general concern about this bank here, Silvergate, if they're gonna go bankrupt or not. They said they have a lot of cash and securities in excess. They keep more excess, let's say, security reserves than they should, and that they're good. Is that true or not? We don't know that, but these are the words of their principals. Institutional investors still eye crypto despite FTX collapse. In November, even if the FTX situation kind of destroyed everything, we saw an increase of trading by 57%, coming especially from these bigger investors. So while everybody's crying, big companies are buying. Should that be a signal to you? I don't know. You do your research. Bank of Russia wants to ban miners from selling crypto to Russians. I wanted to mention this, although there's not a lot of information about why they want to do it. The whole situation is Russia wants to approve and let miners mine. And by the way, last week we saw articles about miners using the whole crypto situation where Bitcoin miners are, let's say, going bankrupt to hoard these ISIX miners to start mining in the future once Bitcoin goes back up. The fact is, Russia wants to allow miners to mine, but if they're mining, they cannot sell to Russians, they need to sell to international sellers. I thought there would be some kind of foreign exchange reason on why Russia would allow people to only trade their mined Bitcoin to foreign investors, but nothing has been really mentioned here, so I cannot really give you more information on this. Japan recommends against algorithmic banking in stablecoins. A few months ago, we saw Japan wanting to introduce CBDCs and stablecoins and regulate it. One of the regulations they want to implement on top of what was already discussed is now this ban against algorithmic stablecoins, especially, it makes sense after what we saw with Terra Luna, where if you find the key problems of a stablecoin algorithm, you can mess it up and send it down back into Earth. But yeah, so report outlines reasons why stakeholders are against CBDC. So this is mostly on the US side. We saw US is trying to implement or think about CBDCs. We saw other states thinking about CBDCs. And now we have private, let's say, companies outlining the problems of CBDCs. And one of the main ones is pretty much interoperability, scalability, technological structure, but most of all, anonymity. Okay, sorry, I suck with English, my accent sucks. But yeah, the problem is we want crypto to keep privacy up, and if we make, let's say, a CBDC, the government can see pretty much everything that we do. This is the main, let's say, concern by private companies and private owners and stakeholders, and it makes sense. It makes sense. So they're focusing more on bringing regulation rather than bringing CBDCs on a government level, and leave the concept of stablecoin as the CBDC, basically using the normal fiat currency and tokenize it, as we see with USDC, USDT, and BUSD. US lawmakers want state departments to disclose crypto rewards. This is interesting. So the State Department will have to report on payments it makes in crypto and their effects according to the draft of the NDAA. This is a, let's say, law that has to pass in the future. So it will take some time, because when you have these laws that you know will pass, you see lawmakers trying to push other stuff into it. But one of the factors of this law is that state departments who want to pay in crypto need to disclose how much they're paying and why they're paying, the effect of this crypto exchange, which is good. I mean, at least you have some kind of accountability. Will it be public or not? We don't know. DeFi protocol Sushi proposes immediate action to support its treasury. The problem of Sushi is they have around 15 months of liquidity, of reserve to survive, and they want to, let's say, generate more income for themselves with tokenomics. The question is, how quickly can they get to tokenomics? And one of the developers kind of proposed to put their reserves into another company. I don't know why. Again, this is another of the articles where you have a proposal but not the actual reason, but just wanted to make you aware of the situation. So Sushi, although still alive and still having a lot of reserves, does have less than 2 years worth of reserves to survive. Last but not least, and this is, I want to mention it because this is a few hours ago, yesterday, First Mover Asia, Bitcoin holds its 17K perch amid rate hike concerns. So we saw Bitcoin that already is under 17K, so this article is already too old. The fact is, we see concern among investors about Federal Reserve rate hikes, but on the other hand, we know that investors are expecting a 0.5% rate hike, and if it happens, it means that the market is now constantly, let's say, getting what it expects, which brings some more stability. So I don't think that this article or people concerned about rate hikes should be too concerned. The main concern here, I believe, should be if the market expectation meets what actually happens. Guys, that's all for now. Again, this is not financial advice. I'm simply trying to report what I see. If you have any other suggestion about any other article, website I could use, please let me know. I might add it here. Thank you for watching. Please like and subscribe. Ciao.